Hi everyone, it's Kristy Vallee with Modern Traditions Realty Group, and we are here today with Matt Scout at Southeast Mortgage. He's one of our preferred partners. Today we're going to talk about what is happening in the mortgage market, what's happening today, what you could expect in the future, and what buyers and sellers need to know about what's going on in the Metro Atlanta market today.
Hey everyone, it's Matt Scout, Southeast Mortgage. Happy to be here, and let's get into some of the questions.
Awesome. So what are some of the things that you are talking to buyers about today as far as where the rates are now and where the rates are headed?
For sure right now, because rates are increasing, they're volatile, but we are seeing the past few weeks they are increasing. So more than anything, educating the borrower, letting them know what's going on with the market, what are we seeing, and why is it happening?
Okay.
I think with making sure they're educated, they know where they can look to watch the market. Like if they're watching the 10-year treasury bill, that's a really good indicator of what the rates are doing. When they have something tangible to look at, they feel a lot more calm, educated, and fine going through with the process.
Well, what we're finding is that people are a little hesitant because the rates are a little bouncy right now. They're kind of going up and down. And so do you find that buyers are kind of sitting on the fence and trying to decide when to lock the rate?
They are. I think it is a conversation though. Most of the time, if I have the conversation with them and say the reasons why, they feel a little bit more at ease. There's going to be some that no matter what, the volatility scares them, and we just have extra conversations with them because of that. But as long as they're educated, I think it's a lot better for them and they can trust the process more.
And do you think, like in today's market, buyers have less competition as far as we're not seeing as many multiple offer situations? We still are in certain,
to some extent,
certain segments of the market. But in your opinion, do you think that there are other opportunities for buyers to negotiate maybe and so the rate isn't as much of a factor?
I'm definitely seeing a lot more contracts coming across where there is seller credits. And we're having those conversations of, do you want to have your closing costs covered? Mm-hmm. Or maybe if we have plenty in the bank for the closing costs and the down payment, how about we utilize some of the seller credits to buying the rate down? What does that look like and what it makes the most sense?
Right. Because it's really about the overall picture, not just what is the rate today.
That's correct.
Yeah. Mm-hmm. And so what we're finding with sellers also is that they may not want to give up that 3% rate or 4% rate that they have. What are some of the conversations you're having with some of those move-up buyers where maybe they're moving from a lower interest rate into a higher interest rate?
More than anything, we're having that conversation of, we know that the rates are a little bit higher right now. What is the payment difference from that 3% to whatever the market's at right now? How much different is the payment, but what is the need that they have? Mm-hmm. While also discussing, we know rates in the future are going to go down. You're going to have the opportunity to refinance. A lot of people did that when they bought in 2022 and 23. They went and refinanced when the rates dropped in 24 and 25.
Right.
So it's a cycle, and the cycle is going to repeat itself. We're a little bit higher right now, but in a year or so, we're going to see the refinance boom again. So it's kind of dating the rate, marrying the house type deal.
Yes. And we're always asked, okay, so if they're considering a refinance and they're looking at what their rate is currently, mm-hmm. When does it make sense to refinance? At what point from where their current rate is to where the new rate needs to be mm-hmm. for it to make sense for most people? The
rule of thumb is, this is not for everyone, but usually the conversation doesn't start until it's a 1% difference.
Okay, that makes sense.
From my experience, that's usually what I see.
Okay, very good. And then something that, I'm just curious about, mm-hmm. Are you finding that more people are doing maybe more adjustable rate mortgages mm-hmm. or other loan programs that are more popular these days?
I'm getting more questions about it, but at the end of the day, when they actually make the decision, almost no one's going with the adjustable rate, just because we don't know what the market's going to do. There is volatility. And just with how that rate or how that loan is set up, it can adjust after a certain period of time. So even though we know in the next year or two, most likely rates are going to go down, we don't know what's going to happen in the next 7 years.
Right.
I mean, look at what happened during COVID. It went from 2s and 3s up to 7s and 8s.
Right.
What if that happens right as you hit the end term of your adjustable rate for the fixed portion of it?
Yeah, so people would rather know exactly what to expect than to have that surprise.
Correct.
Several years from
they
now.
see that's the flashy thing online, social media, what have you. But then once we have an intelligent conversation about it, they're like, okay, maybe that's not the best choice. Thank you for explaining it.
Yes, absolutely. And then I know that there are some ways to get a lower rate, such as maybe doing a 25-year mortgage instead of a 30-year mortgage. Are you seeing that being a more popular option right now? Are there any other things that you're seeing that people are choosing to do?
I am seeing more people look at the 25-year option. So if you're looking at a 30-year term, 25-year term, the rate is a little bit lower. And because of that lower rate, and you look at the comparison of the monthly payment being just about the same, it is a great option, but not past that.
Okay.
We are looking at other scenarios like temporary buy downs, permanent buy downs, and we can have those conversations. But probably the 25-year is the most popular outside of the normal 30-year conversation.
Okay. And then are there any specific incentives that you guys offer here at Southeast Mortgage when somebody calls you to talk about what their loan options are?
Yeah, so because of the partnership between Southeast Mortgage and Modern Traditions, we do have a few different options we can offer for your clients, and they would have to just reach out to discuss what's the best fit, because there are a few different scenarios.
That's great. Yes, we love being partners with you guys. You've always, taken care of our clients, and anytime we have questions about lending issues, no matter what it is, you answer the phone and you give us the right information and point us in the right direction.
Absolutely.
So if somebody is interested in learning more, whether they're looking to buy something today or 6 months from now, how could they reach out to you?
Yeah. Easiest way is to call or text me at 480-636-6762, or my email is matthew.scout@southeastmortgage.com.
Well, thank you, Matt. Thanks for giving us the rundown of what's going on in the mortgage market today. And we look forward to having more of these sessions to provide the information for you all.
Absolutely. Thank you.
Thank you.